Hey guys, welcome to my channel. First of all, I would like to wish each one of you a very happy new year. In today's video, we will be discussing about investing in international markets. Now, a couple of things I want to discuss with respect to that. Why we should invest in the international markets. Secondly, why we should invest or focus more on US markets. Thirdly, what is the percentage or amount which we should invest in international markets? And last not the least, what are the avenues where we can invest our money in international mutual funds or ETFs? So let's jump on to that. Now, why we should invest in international markets? The simple answer is diversification. When we invest in Indian stock market, we're already invested in financials, oil and gas, FMCG, even service companies like TCS and Infosys. But there are no core tech companies like Adobe, Amazon, ServiceNow, CrowdStrike, etc., which we can invest in. So we should always diversify our investments, and US stock market is one of the way to do that. Now, why specifically US stock market should be our focus? So US stock market, as we all know, is the mother of all stock markets. It has one of the strongest policy framework and has one of the best and finest growth companies listed on it. So that's the reason I feel we should invest in US stock markets. China has a lot of policy issues. They keep changing their policies. Europe doesn't have any growth companies as such. So that's why my suggestion is we should invest in US stock markets apart from Indian stock market. Rest you can take your decisions accordingly as per your understanding. Now, what is the amount which we should invest in international stocks? So, for me, I will recommend to invest 15 to 20% of your total equity portfolio in US stock markets. That's what I am doing, and rest of the 75 to 80% of your portfolio should be in Indian stock markets because in India also we have massive growth opportunities in non-tech. Now, what are the investment avenues by using which investors can invest their money in US stocks or US stock market? So there are multiple ways. First is FOF, fund of funds. Investors can use that. Second is mutual funds, and third is index or ETFs. As per me, ETF is one of the best way to invest in US because that's more cost efficient and that provides consistent returns and mirrors the Nasdaq index. So the two funds or two ETFs which I am recommending are Motilal Oswal Nasdaq 100 ETF and ICICI Pru Nasdaq 100 ETF. These ETFs are mirroring Nasdaq composite, which is top 100 stocks of Nasdaq, and have been providing returns as per the index. In US, if you see, close to 80 to 85% of mutual funds have underperformed the index as such. So it's always advisable to stick to ETFs with respect to US investing instead of jumping onto the active mutual funds. So let's quickly see and compare all these ETFs along with the FOFs and the Nasdaq index and Nifty and see how they have fared in last 3 to 5 years. Let's jump to that. Okay, now let's quickly compare the funds along with the Nasdaq index and see how they have performed in last 1 and 5 year. So let me quickly show you the same. Okay, now what I have done is we will compare Nasdaq Composite, Motilal Oswal Nasdaq ETF, ICICI Prudential ETF, Franklin India Feeder and Nifty 50. So if I look at 1 year return, Nasdaq Composite has given 33% negative returns. That's just brutal if you ask me. Just imagine index is down 33%. What would have happened to the individual stocks? FANG itself is down between 30 to 70%. Just imagine guys, it's a massive buying opportunity for us as a retail investors. Please start buying US stocks in a SIP manner so that we can reap benefits after 2025 or 2026. We'll discuss that in some time. Now let's quickly check the returns. Nasdaq is around 33%. Motilal Oswal ETF. So Motilal Oswal Nasdaq ETF, it follows Nasdaq composition, which means it mirrors the stocks which are in Nasdaq. Now you might say, hey Puneet, Motilal Oswal is down only 25%. That's the right question. Motilal Oswal is down by 25% because there is a tailwind of currency depreciation. So INR has been depreciating against USD from past 20-25 years. In last 15 years, if you see, currency has depreciated from 20 INR to 80 INR against 1 USD. So what it means is, from investing perspective, if you look at the secular trend of INR against USD, since it is depreciating, it will again always act as a tailwind and provide additional alpha returns. But from economy perspective, if rupee is depreciating, it is not good for our economy. Now, similarly, if we see the ICICI Prudential, it has given 25% negative returns. Franklin India Feeder is down 30%. So Franklin India Feeder is nothing but it's a FOF, fund of fund. Franklin India Feeder invest in the Franklin Fund of US. which again invest in US companies. And then Nifty 50 is up 4.6%. That's amazing. Look at Nifty 50. It's just outperforming Nasdaq like anything. Even for 5 year return, 5 year, I think it is outperforming. We'll see that in some time. So if I look at 1 year returns, Motilal Oswal stands out quite nicely. ICICI Prudential is also an ETF and is mirroring index, but it's just 1 year old ETF, but and has a higher expense ratio, which I'll show you in next coming uh, Excel sheet, which we'll discuss. Now let's quickly see the 5 year return. So if we see the 5 year return, so here what's going on is Nasdaq is up 51%, which is quite decent if you ask me from index perspective. Motilal Oswal is up by 84%. It's mirroring Nasdaq composite, but because of currency depreciation, it is giving additional 33% returns, which is just amazing. ICICI Prudential, I'll skip. It's just a 13 months old ETF. I'll skip it. Franklin India Feeder is up quite nicely, 78 to 79%. Nifty is up 70%, guys. Nifty has been outperforming Nasdaq even on a 5 year time frame. So just keep that in mind. Don't invest everything in international funds. Keep Nifty as your base, or Indian indices as your base, 70 to 80%, and then maybe 20-25% in Nasdaq or international stock markets. Now let me quickly show you how old these funds are. So if you see here, Motilal Oswal SSA Blue Chip Fund and Franklin Feeder US Opportunities Fund, all of these funds are close to 11 to 12 years old. So these are not new funds. ICICI Prudential Index Fund, that is 1 year and 2 months old. Apart from that, all the other funds are close to 12 to 11 years old. Another aspect which I wanted to highlight is ICICI Prudential Blue Chip is a mutual fund. Franklin India Feeder is a fund of fund. And Motilal and ICICI Prudential Nasdaq 100 are index fund or ETFs. So that's the difference. Fund size, I think fund size, if we see Motilal Oswal is at 5,100 crores, rest of them are close to 2,500 crores, and ICICI is a new fund. So that is something which is at 500 crores. Now, if I look at expense ratio is only 0.58% for Motilal Oswal. Whereas for others, if you see even ICICI Prudential, it is an index fund, still it has a 1% in expense ratio. I don't know why there is why the fund manager need 1% when they are just mirroring Nasdaq composite. Now, if I look at FOF, Franklin India, it has 2%, and for ICICI Prudential, it is 2.22%, which is quite high if you ask me. Now let's look at the returns. If I look at the returns in last 1 year, ICICI Prudential has outperformed. Mutual fund has outperformed all the funds. 3, 5, and 10 years, it is Motilal Oswal which has outperformed all of the other funds mentioned here. And even if I look at the returns of Nifty, so Motilal Oswal has outperformed Nifty for 5 and 10 years, which is quite good. Now let me quickly jump onto the top 10 stocks. So if you see Motilal Oswal and ICICI Prudential, here you see they are mirroring Nasdaq composite. So it's pretty much same. All your FANGs, Facebook, Amazon, Apple, Netflix, Google, or Alphabet, Microsoft, Costco, Pepsi, Nvidia, Tesla, all these companies are there in both the funds, which is Motilal Oswal and ICICI Prudential. Franklin India Feeder, they have a different set of stocks like MasterCard, United Health, Danaher, ServiceNow, SBCom, and CoStar Group. Now, if I look at ICICI Prudential, it has an interesting set of companies. That's why I mentioned this fund here, Etsy. So Etsy is like a Flipkart of US, just after Amazon. It's a small player. It has been around for more than a decade now. It started its business by selling clothing in America, and it has been there for quite some time. It's a nice company. It's a good mid-cap stock. Wells Fargo, we all know it's the top 5 bank of America. Microsoft, again, 3%. Boeing, 3%. Mercado Libre, that's a very solid company based out of Brazil. You can say it's a Flipkart of Brazil. You can go and study about Mercado Libre, how they have evolved supply chain, logistics, and how they have, captured the market in Brazil. So Mercado Libre is a great company. Go and study about it. It's a fantastic stock, and I like that company. It's nice to see that company in ICICI Prudential Blue Chip Fund. Viva Systems, great company. Walt Disney, we all know. Facebook, Biogen, again a pharma company. Equifax. So I think ICICI Prudential US Blue Chip Fund has interesting set of companies, and if you see the returns, it's not very bad compared to Motilal Oswal. But the problem child is if you see the expense ratio of ICICI, it's quite high. even if ICICI is outperforming Motilal Oswal by 2 or 3%, the expense ratios are so high that it will defeat the purpose of having an active mutual fund versus an ETF if we are getting same or less returns than the ETF. So if you ask me, what will I be investing in? My pick will be Motilal Oswal Nasdaq 100 ETF. If I want to invest in US markets, it will give me a peaceful sleep. It is cost effective and it definitely adds tailwinds of your rupee depreciation and has consistent returns over the longer time frame. Quick summary on the same. Please start your investments in US stock markets because next 3 to 4 years will be best year to buy more units of mutual funds and ETFs so that we can reap benefits from year 2025 or 2026. Once Fed starts reducing interest rates in 2024 or 2025, the tide will turn and these companies will start performing well. So let's use this opportunity of massive correction which is happening in US markets and make most out of it. So start your SIPs and investments now. Howsoever small it is, don't worry that I cannot do more than 10,000 or 5,000. That's fine. Just start buying the ETFs, which are safe in nature, can give you peaceful sleep. It is US market, guys. It has to turn around someday. So just have some faith, trust the process, and start your investments. If you guys feel the video was helpful, then smash the like button and subscribe to my channel. That's all I have for today. Thank you. Bye bye.